Good afternoon, wherever you are located, and thank you for giving me the chance and having me today to talk about a very interesting topic, especially for me, using blockchain to mitigate financial crime. Before I start talking about any application for blockchain, I would like to first set the scene about where do we stand today in terms of financial crime and try to understand the size of problem, which I'm sure you all understand, but it's good to set the scene before we start, and I would like to set it in numbers. Of course, as you all know, the cost of financial crime compliance is increasing, and we reached to 180.9 billion today on a yearly basis spent on combating financial crime. And during the COVID pandemic, the cost of onboarding has dramatically grown, and the KYC verification in some companies reached a rate of 170% increase, which is a huge, I would say, jump in, to invest in one area in financial institutions. And unfortunately, despite all these spends and the billion of dollars that we're putting to combat financial crime, only 1% of illicit fund has been intercepted by the financial institutions. And of course, this leads to the increase in financial crimes in terms of, let me close this, the increase in financial crimes, 2 trillion laundered globally in a single year, and the payment fraud has tripled since 2009 to reach 32.9 billion today, and it is expected in 2027 to exceed the 40 billion. And on top of all these losses and financial crime and the cost of compliance and the cost of non-compliance, add to it the penalties incurred by the financial institutions. In 2020, the fines reached 10.6 billion. And because of all these huge number of fines on the financial institutions, unfortunately, de-risking became one of the strategies adopted by the financial institution to mitigate the risk, at least at the level of the institution. And of course, and as you know, de-risking by itself, it introduces another kind of problems, and it basically defeats the whole purpose of everything that we're doing, which is combating financial crime and promoting financial inclusion. De-risking is doing exactly the opposite. It pushes people towards using unregulated financial networks like shadow banking or maybe cash-based transaction, which will be very hard to monitor and control. And the other thing, and because of the increased financial exclusion by doing the de-risking and cutting services from people, this will have a very negative impact in the economical and the social life of these people, because the basic financial services is the first entry to the modern economic and social life. So we're impacting by doing this as a measure of managing risk. We are actually harming the entire industry. So would blockchain help in such areas? First of all, let me just clarify one thing. I'm not talking about cryptocurrencies or virtual currencies in blockchain. I'm talking about using the distributed ledger as a tool to enable our controls over this technology and benefit from the characteristics of this technology. So how would blockchain really help in this area? A recent study by Barclays suggested that permission blockchain would be a groundbreaking innovation in AML. And another study by Goldman Sachs estimated that using blockchain or distributed ledger for AML might save the institutions 3 to 5 billion a year. Well, it sounds like a magical tool, but of course, there's no such thing, magical tools, but DLT or blockchain technology, it genuinely represents a revolution in how human can interact in more scalable way. but it is our responsibility to understand this technology and to see how we can use it actually to enhance the efficiency of our operation, the controls, and of course to reduce the risk coming from the financial crimes. And I will be talking about two cases where I feel it is very obvious where the DLT can help in enhancing the situation. First of all, other speakers talk about the challenges in the KYC, the customer onboarding, and the cost of this process, and the struggle for the institution and the customer, which leads eventually to losses from the institution side and dissatisfaction from the customer side. The other area that I believe DLT can help a lot is to reveal the beneficiary owners. It's very important, and we have all let's say it was very obvious that growing crime revealed by the Panama Papers or the Swiss leaks, and this is and since then the regulator is trying to come with measures and tools to really reveal the information for the ultimate beneficiary owners for institutions. So how DLT can help, or blockchain can help in this area? So it's basically, when you think about it, having a centralized or having let's say a common platform where you can share all the information about entity or a person, which is a secured platform, immutable platform. This by itself a good start to use this platform. So we can really use the DLT in many forms, decentralized, hybrid, or centralized, to serve our needs. So to build let's say a DLT-based KYC. So basically we can, if you want to go with the fully decentralized, where all the nodes or all the banks or participants on this chain have the same function, and they all participate in uploading the data, confirming the data, and verifying the data. So this is a fully decentralized, where if I'm a customer wants to the first time open an account in one of the banks, I will go to the bank. This bank will do the entire process of customer due diligence, and all the information will be logged into the blockchain or the DLT, the distributed ledger. If this customer goes to another bank to open another account, this bank doesn't have really to redo the entire process again. So the due diligence exercise done by the first bank can literally be piggybacked by the other banks. So there's no need to repeat whatever has been done. So the second bank will only check if there is any change in the information updated in blockchain, and it's the same for any nodes or participant in this blockchain. So all banks on this blockchain will benefit from all the information entered on the chain, and at any time, all of them has exactly the same copy of this information. And of course, everything is done based on the customer approval. No one can have access to the data without the customer approval. But in some cases, especially in the beneficial owner case, where you need to have sometimes official documents like the majority shareholders, who's the controlling person in the company, the source of assets, the source of wealth, all these kind of information sometimes or most of the times needs a trusted third party to provide such information like the certificates and other documents. So in another model, we can really have a third party connected to this network who has access to all we needed documents of a governmental, commercial, general registry. All these documents or information can be really digitized and incorporated into blockchain and make it available to all participants or nodes on the blockchain. And in this case, the banks will benefit actually, and even the customer will benefit that there's a real-time access to trusted, immutable information, official information from this trusted party. And this can be shared by all banks. Another model, when people decide, and this is basically the hybrid model. Another model is when a government or a country decide that we need to have a centralized KYC registry. So basically, we want this KYC registry to manage all the data, the static data we're talking about, and share it with all the banks to be the basis for customer onboarding. Whatever model is chosen, we decide the characteristics of this, the characteristic that we want to benefit from this technology. And of course, it doesn't really matter if it is centralized, decentralized, or hybrid. What matters really if it serves the purpose that we want to serve it. And this should be actually our objective. The second case where we can use distributed ledger is in the area of anti-money laundering and combating terrorist financing. And of course, the challenges are known for everyone: the amount, the complexity of data, the redundancy of work. The most importantly is the lack of collaboration between institutions, the size of false positives. All these are challenges that we need really to look at DLT and see how or the possibility of mitigating these challenges. Using the DLT automatically, you will actually benefit from the fact that it has it is immutable and the data is trusted, so you will immediately benefit from the data integrity. And this is the first step towards combating financial crime, is the accuracy of data and making sure that it is consistent across all entities. Of course, on the transaction level, if the transactions are stored or done on the blockchain or distributed ledger, this technology will allow both banks in the both ends of transaction to really verify the credential in real time for all parties involved in this transaction, and decided if there's any suspicious activity or if they detect anything, then an alert will be released. Once one of the banks in the distributed ledger release an alert for any suspicious activities, the nice thing that because all nodes are on this chain, if I'm a bank and I have this person who created this alert on my records, I'll be notified that this person has been detected in one of the suspicious activities, and I'll have the choice to either put more controls, block this person, or increase the risk score for this person. But at least I know in advance I've been, and this is one of the benefits, it's the collaboration and sharing information whenever it is needed. Of course, the fact that everything is stored in the blockchain, all the information, we can really run very advanced algorithms in real time using AI mechanism, different machine learning models on an aggregated level of data, not only on individual source of information from one entity. So imagine have all the information in one platform running advanced algorithm on aggregated data. This will be a very strong tool to really detect any patterns for any fraudulent activities or any attempts for money laundering or any new typologies for money laundering. Last but not least, it will be very really beneficial if the regulator themselves decided to be part of this chain, so they can really participate on monitoring suspicious activities and be proactive rather than waiting for the report stars and STRs to be reported to them. So they will be part of this platform. Of course, all this needs to be harmonized. We need to revisit all the rules and procedures if we decided that this is the model that we want to follow. Things that, because everything I talked about, it looks beautiful, and we should all really start using distributed ledger for KYC, for AML controls. But there are things that really we need to think about very thoroughly before we apply any DLT technology, because there are some problems or challenges introduced by this technology itself. We have not to forget that blockchain or distributed ledger, it will collect the information as entered by the bank and distribute it to all participants. So there is no really inherent truth check in the process of logging the data into blockchain. It totally depends on the bank, the due diligence exercise that they're doing, the level of checking that they're doing. So if intentionally or unintentionally this bank entered error or wrong information, that information will be carried and amended to the blockchain and distributed to all banks, and it will appear correct to other participants. And of course, it will be because the update is automatic, it will be very hard to stop the accumulation of errors, and the data, the error-free data, will be easily polluted by this data. And because of this, and because there is institution relying on this information, if I am a relying bank and I'm using a wrong information, I will be liable for that mistake, not the providing banks of the data. And my first reaction will be, okay, I don't want to use this ledger, it is not trusted, and I will quit this ledger, which will lead to another problem, because we need participants to trust this ledger and to have wider participants so we can really realize the maximum benefits of this platform. But again, having a wide participants has to be really monitored, because the fact that you're opening it to all financial institutions or certain financial institutions, a group of malicious people may decide that let's create our own financial service entity just to have access to this data. And imagine the amount of data or reports that they can have access to, or if there is any detection for any suspicious activity. So this will be very dangerous. The other thing is the privacy law. Of course, the characteristics of distributed ledger by design, by DNA, it's obvious that there's a conflict with the GDPR's right to be forgotten. Of course, this has to be looked at very carefully. One of the options was, okay, let's have a off-chain modifiable database for personal data. This is one of the solutions. But anyways, there's a lot of things when it comes to managing data and information in blockchain that needs to be really studied and well structured, because we need to think about the archiving. Are we going to trim the blockchain? Are we going to have on-site chain? All these things has to be well studied and agreed on before going towards any projects, because this is a project on a, let's say, regional or on a country level, and it has a tremendous impact on everything. I would like to talk about a real business case done by our company, Eastnets. We have started this project 4 years back when we have thought about the challenges faced by our customers who's using one of our products, which is the screening. So we have our screening engine, a very advanced screening engine, where a customer is using it to screen in real time all transactions and stop any suspicious activity based on whatever is listed in the sanction screen. So our engine will screen all transactions in real time against the sanction list provided by the list provider. One of the challenges that we have noticed that the frequency of sanction list updates and the way the customer they are doing this updates, it really involves a lot of challenges and a lot of vulnerability. When we looked at the process itself, we have noticed that and we took Dow Jones for a reason, because they are our partner in this project. So when we looked at how the customer is using the sanction list provided by Dow Jones and other provider to inject it to our screening engine, we have noticed that what they do actually, they wait for Dow Jones to release the updates. They put a schedule, it might be end of day schedule to take this updates, and they store it as a script, as text file in a folder. Then after working hour, they upload it to the screening engine. The problem here is the frequency of updates provided by Dow Jones and the journey itself from the Dow Jones till it is injected to the engine. The connectivity, the liability in connectivity is really weak, because if this disconnected for any reason, you wouldn't know if you got the update. The fact you are putting everything on a text format, this makes the files mutable. Anyone can really manipulate the data. Imagine that I access a sanction list and I remove one of the entities from the list and no one will know about it. Even if you have the checksum mechanism, Still, this is there's a lot of human intervention. There's a lot of dependency on the internal process of schedules. If the connection is down, all this will impact the quality of list that I'm using in my screening engine. And the problem here that they have to wait even after working hour to inject the updates to the screening engine. So there is a huge delay in getting the updates on the lists on my engine. And the other thing, if everyone or every entity has their own schedule to get this updates from Dow Jones, the problem here is at any moment of time, there might be information asymmetries because everyone will update in different times. And this will actually lead to absence of coordinated actions, and this will create conflicts between financial institutions. And this is very serious problem, especially now with the frequency of updates with the Russian-Ukrainian war. I believe there is a change every hour, or if not more. And the banks is overwhelmed of monitoring and trying to comply with the sanction regulations. And this is by itself a very risky, very frustrating area. So what we have thought about, I want to remove all these process and make it more a kind of a seamless operation. What we have done, we have agreed with Dow Jones, okay, you can provide your updates the way you want, but I want to carry the updates over my own blockchain, a distributed ledger technology, and I want to distribute this update to the subscribers to Dow Jones who is using our screening engine. So basically what we have done, we have agreed with Dow Jones, you will give me updates every hour. I will take this, I will listen to the updates, I will carry it immediately with zero human intervention, using immutable ledger and reliable connection in real time, and inject it directly to the engine, the screening engine, on the fly with zero downtime, making sure that the list that the bank is using at any time, at any moment, is up to date. And you can really trace and audit these updates and make sure and make a consistency check between what you have in your engine and what have Dow Jones released on the updates. So you have 100% assurance that you are using the up-to-date list and you are not losing any updates. So the other thing, the nice thing about it, if you are an entity having you work globally and you have different branches and your operation is not centralized in terms of lists, you can at any time of the day, you are 100% sure that all the entities are using the same list at any point of time. Not only this, also the banks you are dealing with, if they are using the same service, so you know that there will be no conflict in actions due to the different timing in doing the updates on the list. Today, as we speak, we have around 30 customers, 30 of our customers who's using our screening engine have been linked to this service, and now they are enjoying having immediate updates on their engine without even knowing. And if you look at the average of the update, the maximum time that the list updates will take from Dow Jones releasing the data till it is up and running in your engine, it is maximum 5 minutes. With zero intervention, seamless, you don't even have to stop the screening integration, and you can at any point do your consistency check and make sure you're not missing anything. And you can audit it, you can trace it, everything is time-stamped, and this is all inherited by design and the distributed ledger you don't have to worry about. Last but not least, I would like to conclude that the financial crime will continue to increase. The fight against financial crime will get complicated, more and more complicated. The distributed ledger-based solution are compliant with regulations by design. It is immutable, it is secured, it is trusted. So you can really use these characteristics to enhance your position, to increase the efficiency, to increase the collaboration. And this is the most important thing, because even the regulator now, they are giving recommendations that financial institutions should share information between each other to help on combating the financial crime. But of course, we cannot do any of this without the collaboration and coordination between regulators, financial institutions, auditors, and all stakeholders, so we can really utilize and truly make an impact by using this distributed ledger technology. Thank you very much for having me today. If you like to know more about our solutions, please visit our website, eastnets.com, and to learn more about our journey as a company. I do encourage you to read the Two Brown Envelopes, a book by Hazem Melhem. He's a CEO and founder of Eastnets, and it will tell you the whole story of a young Palestinian person coming from a village in Palestine and making a very well acknowledged and respectful organization with the purpose of making this world a better world by combating financial crime, helping even countries to be part of the financial network, increasing the financial inclusion. So